Hello and welcome. You're watching Closing Trades on ET Now. I am Snehi Shah, and last 1.5 hours left of trade. Let's take a look at what's happening with the market right now. You have a little bit of a selling pressure that's being seen on the Nifty right now. 0.3% lower for the Nifty. 25,900 is where we are at, so 100 points away from that 26,000 mark that we'd actually really like to see. But other than that, it's been an earnings-heavy day. We've had so many earnings. Bata in focus on the back of weaker than expected numbers. TTK Prestige on the other side, such a sharp run up on that stock on the back of brilliant set of numbers coming in. While we are talking about numbers, yes, see 11.5% uptick on TTK Prestige, very healthy move on that front as well. But while we are talking about earnings, let's interact with the management of NIIT Limited. We have Mr. Vijay K. Thadani, the Vice Chairman and Managing Director, joining us on the show. And if you take a look at their numbers, the revenue is up about 25% on a sequential basis. EBIT loss at 8 crore compared to a loss of 17 crores, and net profit at 1 crore compared to 4 crores. There's a little bit of a blip on that front. Mr. Thadani, good afternoon and thank you so much for your time today. Let's talk about your financials. Let's throw some light on the kind of numbers that you've reported. A little pressure on the bottom line this time around, even though the top line has seen some healthy growth. Your take on the Q2 numbers and what is the outlook on profitability going ahead?
All right. So I think it's been a very good quarter from the way we had forecasted and the way we had projected. We are actually on the upper end of the guidance that we had given. We had a revenue of 104.9 crores, 16% growth YOY and 25% QOQ. This is in contrast to a place where we were in Q1, where we had the orders, but we couldn't execute them. This time we got a chance to execute those orders, but more interestingly, we added many more orders. So we had a very decent order intake, 145.4 crores. And we were able to keep the EBITDA, despite our guidance of being slightly negative EBITDA, given the fact that the company is in an investment cycle. I think we were able to show some positive EBITDA because of good pricing and, most importantly, through our AI-first strategy. It is the AI-first strategy which got us 18 new logos, which added momentum to our order intake, very good growth in technology sector, given the strong need for upskilling and reskilling which is coming up, as well as new set of skills which the early career students need. So as you can see, we had growth both in enterprise as well as in consumer segment. On the other hand, on the BFSI, there was still a cautious statement to make because the hiring has been quite restricted for a number of reasons. On the other hand, India enterprise is very, very bullish. So if I covered sectors, technology and India enterprise really firing very well. BFSI in very good shape. We are market leaders, but at this time, the demand from their side is muted. We are in an investment cycle. We invested very heavily in AI. We invested in an inorganic entity called IMNEO, which incidentally has done exceedingly well, much ahead of their projections in the first quarter with us, as well as very good profitability. So despite the investment cycle, I think we were able to show a positive profitability, or was a positive scene. And I think the strong order book puts us in a strong shape for the rest of the year. That's how I would like to summarize. And I think AI first strategy is working out very well.
Mr. Thadani, let me take a step back. Hi, this is Harsh. Sure. I want to first understand what your book-to-bill currently stands at, because that will also, to some extent, drive execution. You spoke about the strong growth that you've seen in Q2 as a result of the kind of book-to-bill that you were sitting on and slower execution in Q1. Talk to us about how that is panning out in terms of how the book-to-bill is shaping up and how much traction are you seeing on the order book side of things. Give us that sense.
Yeah. So a good question, very good question actually. Our book-to-bill moved from 1.25 to 1.4. So that's a very positive statement. The second is we have a strong pipeline, so that's helping us a lot. And I think our AI-first strategy and our very unique position, especially of using AI for learning and development, is putting us in a very strong competitive position. We added 18 new logos from a corporate side. And of course, our new acquisition, IMNeo, has done very well. It's getting very good acceptance from universities who would like to introduce the IMNeo AI-powered SaaS platform as a part of their curriculum. And that's, by the way, an annuity-based revenue. So that helps us a lot in building a strong position. If you were to look at the book and bill and the strength of the orders that we have, we closed the quarter two on a much higher order book than we closed quarter one. So to that extent, I think that additional momentum will also help us in going forward.
Okay, and Mr. Thadani, lastly, before we let you go, you had guided for a 25% growth. Your revenue growth has come just about that. What is your target for the revenue growth for the remaining quarters, the overall financial year? If you could share some outlook for FY27 as well, and similarly for margins as well.
Okay, so first let me correct. We had guided for 13 to 16% growth in this quarter on a YOY basis. We have had 16%, which is what I meant when I said upper end of our guidance. The second is for the year, our guidance was 15 to 20%, and I think we will stay committed to that guidance, given despite the fact that there is a lot of volatility, but the strength of our order book, our pipeline, and the strength of the products and offerings that we are going with in the market and their acceptance, I think our confidence remains in holding on to that 15 to 20% guidance.
Okay, thank you, Mr. Thadani. We'll let you go on that note. Thanks so much for joining us. And apologies once again to keep you waiting between the two shows. Thanks for coming in and speaking with us.
No, as long as we met, that's good. Great. Thank you.
Thank you for coming in. Okay, so that's NIIT Limited, viewers. Numbers came out maybe half an hour or so ago, and that's the guidance that's coming through. Let's talk about JK Tyre. Again, we spoke about this morning as well. Outstanding set of numbers, record top line. We've not seen JK Tyre do 4,000 crore of top line in a quarter. We've seen that for the first time this quarter. 2.5% uptick on the stock. You talk about EBITDA as well, 24% growth on the EBITDA count. The margins have come in at 13% versus 11.5% same time last year. So it's been a significant uptick that we've seen on that count as well. And you saw, of course, record profitability on the back of that. 64% is what profit after tax has surged by. We are joined in by Anshuman Singhania, Managing Director at JK Tyre, to talk to us about those numbers. Mr. Singhania, first off, great having you. Give us a sense, the kind of traction that you are seeing on the EBITDA side of things. How much of that is raw material based growth, and how much of that growth is the scale that you're trying to push and the operating efficiency that you're trying to push? Give us a sense of that first.
Yeah, thanks for having me to your show. The raw material from quarter one has come down in terms of the raw material basket in quarter two. That has definitely helped in expanding our EBITDA margins. Apart from that, there has been robust demand in the economy thanks to GST and the rural income picking up and good monsoon, and also notwithstanding the government push of infrastructure. That is all creating good sentiment of demand. In fact, we have done very well in the aftermarket markets in the segment. In the truck radial, we have done 22% growth, and in the passenger line radial in the volumes, we have grown by 16%. And even in the farm, both in the OE and replacement, we have grown high percentages. So this gives us a sense of the growth which we are being able to do, and also gives us the confidence going forward. This growth momentum we'll be able to maintain. So overall, the EBITDA margins, what we have achieved, it looks like we are going to be in the same range for the next coming quarters as well.
Okay, so thanks for that outlook. Mr. Singhania, also help us understand for your domestic business. You've guided for double-digit revenue growth in FY26. Are you going to be sticking to that? Are you going to be making any revisions over there?
No, the way the demand is panning out, and with our some new exciting product launches also in the market, and our deepening of our participation both in the OE and the aftermarket, and not leaving aside our export push, we will be growing at the same pace. So we are hopeful that we will grow at the same pace.
Okay, Mr. Singhania, may not be completely related to your Q2 numbers, but give us a sense on the debt, because that level continues to remain elevated. Is that at all a concern for you? Is that something you're working on? How does it start to come off?
Well, our debt has increased slightly if we compare the last quarter. And this is merely because of the working capital need, our higher inventory need. But this debt will definitely come down as we go along the quarters.
Sir, give us a sense. How much? What's the internal outlook like? The cash flow currently is strong for you, so trying to get a sense. Do you therefore repay debt quickly?
So we have a program of repaying debt, which is happening at a consistent basis, at a program basis. So today our debt is at 4,200 crores as against 3,800 crores, which was in June. So as I said, that we will be steadily decreasing our debt as we go forward.
Singhania, you've also cited rural revival and infrastructure push as one of the reasons why the quarter has done well, or those could be the reasons. Give us a sense of what is the demand offtake over there in the rural segment of the country, and how do you look at the urban-rural mix going ahead?
Well, this monsoon has been good. There has been a lot of reform corrections by the government, which has also given a lot of money in the hands of rural. So we are very confident that, and the indications are from our farm and 2-3 wheeler sales in the rural segment, which has really shown positive uptick on the numbers. So we see that the rural sentiments are going to have a good positive rub-off in terms of in our demand. I would say that in the urban as well, there is a uptick, especially with the GST making the entry-level car models more affordable, and even in the next above the entry level cars are more affordable. I think there will be good traction coming in from 4 wheelers and also 2 wheelers as we pan out in the next quarters as well.
And price increases, sir. Now that rubber prices are well under control, as you indicated, you expect rubber prices to stay controlled likely. What's the outlook for FY26? And therefore, will the price increase only add to your margin?
Rubber prices in the last quarter also had reduced from quarter 4 if we compare, and even from quarter 1 to quarter 2, the prices have gone down in terms of the raw material basket. We see that the raw material is going to be in the very range bound this year, so there are not going to be major any hiccups coming there. So definitely that is going to be adding to the margin expansions. And in terms of price increase, we are always scanning the market in terms of any competitive pricing. So we go with the market price sentiments.
Okay, and Mr. Singhania, I understand volumes have been around that 13% mark as reported. Help us understand what is the sustainability on that front. Where are you seeing volumes headed going ahead?
So we see a good volume coming in because of the good demand, and especially where we have a leadership position in the truck radial tires, we see a good push coming in there. In the OEM has picked up. We are the largest participant in the OEM segment for the trucks. Plus, the demand in the replacement market has also revived. So hence we've got a 22% growth in the replacement market in the truck radial tires, and we see that this growth is going to be there as the core industries, cement, steel, construction is picking up. So there's a lot of freight movement. So this looks to be healthy going forward. In terms of passenger line radial, we've also had a sharp growth of 16% growth, and with lots of introductions with vehicles in the OEM, where we are participating with the major OEMs and their exciting product launches, which is also lined up during this whole year. There we see a growth coming in, and including the replacement market as well. So it is going to be overall, we see that the growth is going to be quite constant as we go along in the quarters.
And Mr. Singhania, would it be right to say that replacement margins or the margins coming from replacement demand are better in other over? I mean, so are they margin accretive for you? Is that sales margin accretive for you? Are those sales better for you? Just give us a sense on the margin outlook for replacement versus new tire demand. So that's the first part of my question. Second, you've planned a 1,400 crore capex. How is that playing out? Give us a sense.
Sure. So we are, in terms of the revenue split, we are 60% replacement and 40% on the OE side. We have a strong footprint in the commercial segment, and that has revived after a muted growth in the CV. This year, we are looking at a high mid single digit growth coming in from the CV segment. So that is doing well for us. In the passenger car, also, we are looking at, from the OE perspective, we are looking at a high single digit with a lot of exciting models getting launched, where we are also participating. So there also, where we have done 16% growth in our replacement market. So we see that trajectory to be quite focused, and I think that will grow. The other part of your question was on the expansion. Yes, 1,400 crores we are underway right now. So in the truck radial tires, we are expanding, which will be on stream next year, first quarter. And in the passenger car, it should be in stream by in the fourth quarter next year. We should be up and about running.
Okay, so that sounds good. Thanks for that outlook, Mr. Singhania. We hope to be chatting with you more often, and thanks so much for your time today.
Thank you.
Thank you. Okay, viewers, on that note, we'll slip into a very short break, just eyeing what the Nifty is doing. We did see a little bit of a sell-off today on the Nifty at the start of the show, around 25,900. Let's see if there has been any incremental uptick since then. No, in fact, there has been a further cut. 25,850 thereabouts, about a 0.5% cut on the Nifty, about 1 hour of trade left. We'll catch more of this market action on the other side of the short break.
Watching Closing Trades here on ET Now, and joining us at this hour we have Dhananjay Sinha, CEO and co-head of equities at Systematics Group. We also have our very own Kunal Bothra with us. Welcome both of you. Dhananjay, before I come to you, let's quickly take a view from Kunal. Kunal, what's the view with regard to the index? It's not been the best day of trade, right?
Yeah, it's been a bit choppy right from the start. I think we managed to hit that 26,000 mark at the front, but then I think on the intraday basis, we've seen almost like a 150 point kind of a reversal or retracement from the day's high for the indices. I would probably sense that this is more to do with the expiry action today, because we're looking at the theme for the markets in terms of sector churns, etc. And it's little all over the place in terms of the index trends as well as the stock specific trends. So I think in that sense, I would probably expect that maybe the markets would just about consolidate over here for the next couple of days, but the trajectory and the trend is still on the upside for the indices.
Okay, so sounding optimistic for the way ahead, even though we're seeing a little bit of choppiness today. Dhananjay, hi, good afternoon, welcome to the show. Another 2.5% uptick today on PSU banks, looking very strong on that front. It's actually certain names that are doing very well. Indian Bank, PSB, Maharashtra Bank, all of them are doing well. Given the kind of market setup that we're seeing where Nifty is under a little bit of a pressure, it's actually PSU banks that are one way leading whatever run-up we're seeing in the market. Are you bullish, or is that your view on PSU banks, and do you still believe that there is further upside to the kind of run-up we've already seen?
So I think there are news events that are happening with respect to the PSU banks. I think there are news of dilution and more FII participation. So there are multiple things that are happening. I think that is creating a sort of a sentiment which is positive for the PSU bank. So basically, we were also of the view that given the valuation that they are at, there is a possibility that market rotation might start favoring PSU bank. So that possibly is happening. But by and large, I would say fundamentally, if you look at this quarter, the performance of profits of the banking sector in general has been lackluster, and there has been a sort of a margin compression that has happened largely because of the lower interest rates, and overall interest income has actually been slowing to roughly about 6 odd percent if you look at the entire banking system. So I think fundamentally, I think markets are pricing in some of the news events, and also the fact that people do expect that there is a bottoming out of margins that might happen at this juncture. So that is a market expectation, and there is a sort of a role of market sector rotation that is also happening. But my sense is that it will be too early to expect a turnaround in performance. We are seeing in terms of the overall credit growth, it's been slowing, and we'll need to see whether this will expand going forward or not.
PSU banks, Kunal, you are ever so positive. I'm not sure what else I can ask you with regard to PSU banks, because we've spoken so much about this. But the move today, 0.8 odd percent, on a day where there is sustained weakness on the index, you're still continuing to see PSU banks not just perform but outperform. They're just in another zone of their own.
Exactly.
What's playing out here on charts? Is this going to be a 3-month, 6-month, 12-month, multi-year? How should one look at this?
It's difficult to project the time frame, how much I think the PSU banking stocks would probably outperform. But this is a clear indication that we are looking at a sector which has become a lot more formidable than what was maybe 3 months or 4 months back. I think 2-3 months back, PSU bank index was almost at 6,700, 6,500 mark. Now the index is at 8,000 plus levels, and it's been a phenomenal recovery in this last 3 odd months for the PSU banking stocks as well as for the indices. The index itself has recovered more than 20%. So that tells you broadly that stocks would probably have outperformed, especially for few of the larger cap names and the tier 2 mid cap stocks. Now we are looking at a point where many of these stocks are breaking past about their 2024 highs. Momentum is coming back into these stocks, relative outperformance. Now, when you see such kind of signal, it's generally an indication of a major trend which could shape up into the entire sector. Something, for example, which happened for auto stocks a few months back, when you saw few leaders emerging from the pack, and then many of the stocks moving up by a margin of 20-25%. So that sets the tone for the sector over the medium to long term. I would sense something very similar happening to the PSU banking index at large. Still remain one of the top favorites over here in terms of the sector approach, and I would still look at the larger cap names more prominently, the likes of SBI, Bank of Baroda, PNB, Canara Bank, etc.
Okay, so that's Kunal's take on the PSU banking space up 0.8% right now as we speak. But like Dhananjay was flagging off, lots of reasons why public sector banks are rallying on the back of several factors rather than one of them being the news of government mulling FDI hike in the lending institutions. ET Now had first reported about the developments last month on the on the 24th of September. Prakash Priyadarshi, who broke this news earlier, is joining us with more details.
Well, the government is mulling a hike in the FDI limit in public sector banks. In fact, sources tell us that the government is considering a proposal to raise the 20% cap on foreign investment in PSBs, a very significant development coming in. Foreign investment may increase beyond 26% and go as high as 49%. However, sources have confirmed that the government will continue to hold a minimum 51% stake in PSBs. ET Now has first reported this development last month, which is part of the government's next generation reforms in the financial sector. Sources also tell us that this proposal, among others, was discussed in the recently concluded PSB's month. A comprehensive review of foreign shareholding norms is underway between the government and RBI at this point of time, and appropriate decision would be taken at the right time. Government sources are also of the view that increasing foreign investment will ensure stable fund flow, strengthen the capital base and support expansion of PSBs, which will also improve service quality and technology. These efforts are part of the larger objectives of the government to place at least 2 PSBs among the top 20 global banks.
Okay, so that's the take coming in on the reason why PSU banks have been doing very well. But if you take a look at the only other sector apart from PSU banks that's in the green right now is Nifty Metal. A good move coming in on some of the metal counters. Jindal Steel is up 4%, Tata Steel, JSW Steel. So it's actually a couple of these steel stocks like SAIL also up 1.5%. Steel is the flavor of the hour from the metal pack, and that is doing very well. Kunal, your take on some of these stocks on the charts. Take a look at the run-up on Jindal Steel and Tata Steel today. Your outlook on both of them?
Yeah, so I think the entire sector is looking very strong over here, Snehi. And we are looking at a point where many of the metal stocks are coming back into multi-month, multi-year breakouts. I think Tata Steel is still some distance away from breaking the lifetime high levels, but the momentum into the entire sector is quite strong. I would still believe that Hindalco is one of the top favorites over here. Of course, the stock has run up exceedingly high, and that's why you're not seeing the stock performing today as compared to many of the other peers which are trying to make a comeback for themselves. But I would largely believe that from here on, the trend for the entire metal sector still remains to be bullish. But I think at current levels, you just have to be a little bit more patient if you're looking to go for a buy. I think waiting for a mild dip or a correction over here for the metal sector could actually be a good advantage rather than buying at current levels.
Okay, and you've got IOCL's management commentary, Q2, coming through. And before I go to that, Dhananjay, I believe we still have him, right? Dhananjay, on metals, give us a sense where you stand, because there was a brokerage which came out with an upgrade on a Tata Steel. When I was reading up even yesterday, metals and POSCO in particular, and their September end numbers also seemed to have a positive bias. So globally also there seems to be support where metals is concerned. Give us a sense directionally, where are you seeing this go?
So I think metals are generally trading bets. I think so. If you look at last, I would say 3 years or so, it has actually gyrated around a steady path. So I would say from time to time, when the sector rotation happens, metal do sort of pick up. And I would say 3-4 months back, the metal sector was underperforming. At this juncture, what is important is the metal sector is essentially a global sector. So we have seen that there has been a rally in gold and silver, etc. There is certain rub-off effect with respect to copper and other metal space. So I think there is a certain amount of correlation trade that seems to be happening. From a demand standpoint, I do not see a sort of a solidity as far as the underlying sectors are concerned. So if you look at China, if you look at US and other advanced economies, I think a significant portion of steel, for instance, goes into construction, followed by autos and machinery. So these together contribute about 80% of the total, 70 to 80% of the total demand. I would say there is no strong traction in these sectors given the global uncertainties that are there. I would say there is a kind of a financial trade that seemed to be happening. How dollar has traded, how gold has traded. So I think this correlation is translating into a certain amount of buoyancy out here. From a India standpoint, there is a sort of a demand for protectionism and high tariffs, and also these news keep happening on and off. So, but our sense is that if you look at past cycles, let's say we're talking about 2015, where there was a slump, there was European crisis, we saw that notwithstanding the minimum import duty that was given for the steel sector, for instance, the steel stock did not do very well in the following years. So we'll need to really look at this as a trading bet. As of now, I do not have any position in the metal sector. So I am underweight on metals.
Underweight metals. What we'll do with that is take a short break, take a bit of a breather. On the other side, we'll continue to discuss stocks. Some stocks are really flying today. Let's pull up something like a car trade, a TTK Prestige. Just the numbers have been
phenomenal numbers. Cartrade revenue at 193 crores, up 25% year on year. Net profit has more than doubled. It was 31 crores last year, 64 crores this time around. Same is the case with EBITDA, more than doubling. So doubling over there. EBITDA margins at 32.7 compared to 21.1. So that's Cartrade, the name of the stock that we're talking about. A very sharp spike coming in on the stock. About 17% uptick on the stock is
But
massive.
let's discuss that. We need to take that mandatory break.
Yes. On the other side of the break, we'll talk more about
absolutely.
that. Let's
Stay
leave it
with
to short
us.
break.
Motorola Edge 60 Pro, most stunning true color pro grade camera. In association with Bank of Baroda के संग त्योहार की उमंग.
My name is Jayashree Menon. I'm from Mumbai. My family was of 4 people. I lost my husband during COVID. My son is a CA. My daughter is a management graduate. I also was working in a corporate for 35 years nearly. And unfortunately, during COVID, my company had to shut down. Fortunately for me, since I already had a plan, I started my technical analysis studies from 2015. And that's when my professor mentioned about mutual funds, portfolio managers. Suddenly, everything looked, yes, it's possible. You can have SIPs for different goals. At the same time, you can have 5-6 SIPs. So many of my goals, I would say our goals, because my husband was an equal partner. Though I lost him, the dream continued. Various dreams, my son's marriage. I did get my second home, the flat. For me, it was smooth because I had started SIPs.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Imagine a world where every identity is respected. Breaking the stigma around people with disability begins with looking at an ability in that person.
Everyone deserves to move through the world with ease. Accessibility isn't a privilege. It's a right long overdue.
असिस्टिव टेक्नोलॉजी और एक्सेसिबल इंफ्रास्ट्रक्चर के जरिए क्यों ना हम एक ऐसी दुनिया बनाएं जहां हर व्यक्ति हो समर्थ।
ये केवल एक जरूरत ही नहीं, ये समर्थ होने की पहचान है।
When we stand together,
we break barriers and make the world accessible together.
Make the world samarth together.
मंजिल उनकी, साथ हमारा.
Take the pledge for inclusivity on our website. Presenting Samarth by Hyundai, partnered by Times Network. मंजिल उनकी, साथ हमारा.
उत्तर प्रदेश में महिलाओं की शिक्षा, सुरक्षा और आत्मनिर्भरता को नई दिशा दे रहा है मिशन शक्ति 5.0। मुख्यमंत्री योगी आदित्यनाथ जी के सक्षम नेतृत्व में प्रदेश के सभी 1663 थानों में मिशन शक्ति केंद्र किए गए स्थापित। एक दिन का जिला मजिस्ट्रेट पहल के तहत मेधावी छात्राओं को जिले की कमान सौंपकर उन्हें सशक्त और आत्मविश्वासी बनाकर नेतृत्व के लिए किया जा रहा है प्रेरित।
मुझे अच्छा लगा जो भी लोग आए अपने लिए जस्टिस लेने के लिए, अपना हक मांगने। मुझे अच्छा लगा उनकी बातें जानकर, सुनकर, पढ़कर। सर ने मेरी हेल्प की, मुझे बहुत कुछ सिखाया जो मुझे लगता है जीवन में मेरे काम आएगा आगे।
ड्राइविंग माई ड्रीम्स पहल के अंतर्गत प्रदेश सरकार राज्य की बालिकाओं और महिलाओं को निशुल्क ड्राइविंग प्रशिक्षण देकर बना रही है आत्मनिर्भर। सशक्त नारी, समृद्ध समाज।
Look, this investment Guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said, well said, well said.
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Motorola Edge 60 Pro, most stunning true color pro grade camera.
Welcome back. You're watching Closing Trades here on ET Now. Of course, we've got a packed house, but we're adding on to that packed house. Akshay Bhagwat, Senior Vice President, Derivatives Research at JM Financial, joining us. Akshay, it's been a contrasting kind of day versus how we started the week yesterday. Your sense, where do we go from here, maybe as the week unwinds? And of course, today is an expiry day as well. Is this likely just an expiry-led move? Do we see a bit of a recovery starting tomorrow? How do you see it?
First of all, good afternoon to all. So yes, this has been a one-way rally if you see the entire expiry for the month of October. And till now, the rollovers which we note are around 60-65% odd in the Nifty index, which suggests that long positions are holding it a bit slow considering the one-way run-up which we had from the levels of 24,600. So my sense is, see, the trend is still positive. It is just that the parameters on the technical front are a bit overbought. So a slight sideways cool-off action will just get the momentum set for the next round of action. Ideally, the support of 25,650 is a massive support. I believe this support should be defended and still recommend buying on dip strategy. 25,650, 25,700 is the ideal level to go longs. The FII long-short ratio has improved. We would like to see how it opens for the new series, but in all likelihood, the way the technical trends are shaping up, I think we should set ourselves for the all-time high levels till 26,277, which was tested in the month of June.
Visibility on all-time high still continues to be very intact. Akshay, hi, afternoon. Any chance you track any of the names from CarTrade, TTK Prestige and Newgen Software? Some numbers that we've seen trickling in very recently, and all of those stocks are flying away. Do you cover any of these three?
Yeah, so if you look at the technical picture in the stocks which you mentioned, these are flying off, and the reaction is to the news, the results, and I believe chasing them at this point of time really would not work well. So I think a slight cool-off would augment better for good entries on technical perspective. So first of all, on CarTrade, 3132 is where it trades. It's raging. So if you have it, you hold it for targets of 3,400. But if you're looking for fresh entries, 3,000 is a good level if you get that in dips. That's an apt level to take a re-entry in CarTrade. TTK is the other name which you mentioned. So TTK Prestige is already moved up. There has been some profit booking, which we have noted from higher levels of 760. And I think the breakout at 690 odd level, 690, 700 is what the technical standout point is. So I would like to take a re-entry if you get that dip of 700. I think it's just a reaction to the results. It should stabilize around 700 and once again try to get past the levels of 760, which has been the day's high for today.
Wow, TTK Prestige, that move 11.5%. Kunal, what are you seeing on charts with regard to a TTK? Some pullback is what Akshay is seeing. What do you see?
See, I don't track the stock on a very regular note, but then offhand, it seems to be one of the recoveries. With the stock has shown nothing major in terms of the price trend, because when you look at this from 2024 highs, 1000 was the high for TTK Prestige. The stock had corrected to almost 580, 600 in this 9-10 months of a major correction. And now I think just today, based on the price volume data, we are looking at the stock coming back to 700, 720 mark. So when you look at this from the previous year highs, the stock is still down 30% or so. And from the all-time high levels of 1200, 1300 range, the stock is still down 30, 40%. So I think in that context, I would still consider this as a stock which is weak in terms of the major longer-term price trends.
Okay. Weak.
Just to add to TTK Prestige, 52 weeks see that move coming in, 17% lower, sharp spike we've seen. The TTK Prestige presentation is out and the company has flagged off some concerns. They're saying that pricing pressure could be there, but they're saying after remaining stable for a couple of quarters, aluminum prices began trending upward in Q2, driven by ongoing tariff-related uncertainties and geopolitical developments. So that is something that they have flagged off as well. But they're saying uncertainty around potential tariff hikes is causing hesitations in placing new orders. So this is also going to be important to watch out for in terms of what their order pipeline is going to look like going ahead, and what is the raw material pricing, that input costs are going to be like. So yes, all of these are going to be some important metrics to track for TTK Prestige, but this seems like a problem for tomorrow, because take a look at the kind of spike the stock has seen today. Very healthy set of numbers coming in from TTK Prestige. Yes, very healthy numbers over there, and that has taken the street by surprise as well. Hurts a good move over there today.
Yeah, and you spoke about cartridge, and I just want to highlight the trajectory here. Maybe the last 3 to 4 years, what this stock has done. In terms of top line of around 364 crore in March of 2023, which is FY23. That was at 250 crore in FY21. Some bit of pressure crept in. But thereafter, we saw 22 and 23 being growth years. FY24 was the standout at 500 crore. On that base, they were able to grow 30% in FY25. And now they've grown 10% versus FY25 full year. They've grown 10% trailing 12 months in the first half of FY26. So the growth seems quite strong. And with it have come margins. 9% margin in FY23, 16 in FY24, 24 in FY25, and now trailing 12 months is sitting at 29% margins. So you're seeing record profitability come through, and on the back of all of that, you're seeing the kind of rally that we've seen on the stock. It's been a phenomenal rally, around 6.5 bagger is what it's been since the 1st of March last year, I would believe. 2023 is what I'm told. So fantastic rally that we've seen from that point till now. Cart rate, does it pop up on your charts at all now after this kind of rally? Would you be cautious?
It's been a stupendous rally. I remember, I think I was looking at the chart, 1600 it started off, went down to as much as 400.
Yes.
That's a sizable correction for a stock like Cart rate, and from 400 rupees, the stock is at 3000 plus. So it's been a phenomenal multi-bagger over the last 2-3 years. And so of course buying the stock at current levels is of course a very difficult proposition. But then I think what this tells you is that the stock has been into a fantastic uptrend, and I think I've seen this kind of a pattern for the stock that goes back towards its 50-day moving average as a retracement zone, and that becomes a good entry point. Currently those levels are I think almost at 2600 to 2700 kind of a zone for Cart rate. So buying on retracement is a better strategy, but yeah, it's been a fantastic uptrend.
Dhananjay, trading at around 80 times this one. After the kind of rally we've seen, it's one of those platform companies, right? And it's in a niche space also, not too many players like an OLX, which a listed company can boast of running, and it's had its fair share of problems as well. It ran into losses in FY22, those FY21 profits not able to sustain, but thereafter the management seems to have revamped it, and a steady uptrend in profitability is what we've seen. Now we're at record profitability trailing 12 months. What's your sense on a car trade at this point? 80 times earnings and 20 times sales. Okay, we seem to have lost Dhananjay. Akshay Bhagwat, your take on a car trade?
See, the momentum has kicked on very strong. No doubt it is mostly going for levels of 3,400 on a trading perspective. We are at 31,111. But if you were to buy at current levels, I would say no. Let it cool down a bit. And in good, I think 3,000 is an apt level to take a re-entry in this in case you get that opportunity. So I would like to buy it at 3,000, keep a stop loss below 2,800 and look for targets of 3,400. Technical setup is extremely positive, all times high in the making, a bit overbought, but things should temporarily cool off and resume on its uptrend. 3,400 is the broader target you can look forward to.
Okay. So that's on car trade with regard to where Akshay's views are concerned. Do we have Dhananjay back by any chance? Okay, we don't have Dhananjay back. Well, so we'll wait for him to come back. But outside of that, some of the other names that have come out with numbers, let's pull those up very quickly. And AB Realty is one of them. Ola Electric, Bharti Airtel came out with an announcement, by the way. Bharti Airtel Africa's numbers were disclosed, and therefore Bharti Airtel is in focus. By the way, Akshay, what about a Bharti Airtel? You also had an Indus Towers numbers, and that one stock is perked up 3%. Before I come to that, Bharti Airtel, do you have a view, Akshay? Again, the rally from the 350s all the way till 2000 has been outstanding. There's been a bit of consolidation at the 1900 odd mark. But what next for this one?
So if you look at the nature of the stock, majority of the time the stock spends is in a sideways consolidation, and when it moves, it covers up the lost time in a very short duration. So that exactly is how it is behaving. If you look at the last 3 weeks, Bharti Airtel is moving one way up from 1900 to 2087. We have had a breakout of a possible bullish saucer formation at the levels of 2050, which gives you a possible target still around 2175 to 2200. So in all likelihood, the stock is above moving averages. There's a breakout in place. The volumes are supportive of this breakout. And I think with the support of 2000, you can continue to hold for the possible targets till 2200 in Bharti Airtel.
Okay, so that's the take on Bharti Airtel. Before we come to Bharti Hexacom, I just want to, or rather Bharti Africa, just want to take a look at this flash that we're seeing. From sources, we understand that the Union Cabinet has approved the NBS subsidy on NPK fertilizers for Rabi season 25-26. The Cabinet has approved a hike in NBS subsidy to offset high international prices. Now, this is largely along the lines of the speech that we had heard from PM Modi on 15th August from Red Fort, wherein he had said that a key thrust area of Make in India is going to be fertilizer production. Let's pull up some fertilizer stocks and see what the impact is. Deepak Fertilizers is up 3.5% on the back of this NBS subsidy coming in from the government. So looking very positive for something like a Deepak Fertilizer, National Fertilizer, RCF, SRF. I want to see what some of those stocks are also doing. Deepak Fertilizer 3.5%. So healthy move coming in on that stock as well. Chambal continues to be flat, but yes, RCF is up about 1%. GNFC is up about 2%. So good moves coming in across the fertilizer pack on the back of this news flow. We also have Ashi Anand, who's joining us on the show, founder and CEO at IME Capital. Ashi, hi, good afternoon, and thanks for your time. Your take on the entire fertilizer segment and overall chemicals, if you have a view over there.
Hi, thank you for having me on the show. So fertilizers is a space we aren't very active in. We tend to kind of stay away from businesses with large amount of government interference or government controls, more capital intensive businesses. Fertilizers broadly is a space that we've not really focused too much on. It doesn't really fit very well within our investment thesis and rationale. That said, specialty chemicals is a space that we do like. While it is a space that hasn't really been performing too well over the last couple of years, what you have seen is that Chinese supply has come back in a big way post-COVID. But once we kind of go through this current kind of demand supply slump, there are different kind of pockets in the specialty chemical space that India is very kind of strong in. And these kind of, there's a very interesting foundation for longer term growth as India kind of, as these Indian companies merge into global supply chains. Given the very large amount of chemicals that are still produced in China, this value migration away from China towards kind of India, it could be because of either cost reduction, supply chain rationalizations, or just general de-risking, or various other measures by global counterparts, provides a long runway for growth. But you kind of need to go out of this current kind of slump that we've currently been in over the last couple of years, where there's been a certain amount of Chinese dumping and demand really hasn't yet picked up.
Okay, so that's a view coming in on fertilizers. Not too constructive on this sector right now, but on that note, we'll slip into a short break. But as we do that, listen into this. At the FII 9 Riyadh 2025, Hina Gambhir caught up with the unit raises. The revenue from operations at 11,905 crores compared to 9,228 crores on a year-on-year basis. Yes, so those are standalone numbers that we're talking about. And for the net profit, if you take a look at that number, that has come in at about 906 crores compared to 662 crores. So jump at least in those metrics. We'll try and get in a better understanding on how they have fared versus what the street expectation was, because while this might seem like a year-on-year spike, the stock is not reflecting any optimism right now. About 1.5% cut and a sharp fall on the stock once the numbers were out. So we'll get you more details on these numbers and how they fare versus street estimates as well. But Kunal, your initial take on TVS Motors chart, the 1.5% drop that we're seeing right now?
I think it's an excellent chart, frankly, Snehi, even after this intraday dip or the downside for the stock price. But I strongly believe that it's been a fantastic mover for TVS Motors, moving up strength to strength. I think recently also, just 2-3 days back or so, the stock was perched at a fresh high at 3,700 mark. So I think in that context, the longer term price trend is extremely positive. Also, I think we are at a point where the auto stocks are into a very strong uptrend, and very few leaders have emerged in this pack which have managed to break past about their previous lifetime high levels or multi-year highs. For the in that case, TVS Motors is one of the stocks which falls in that category. So I strongly believe that it's a very strong performing stock. I would look at dips as a good buying strategy for TVS Motors. I think the near-term support for the stock is around 3,500 to 3,550 zone. If it taps back into this kind of a territory, it becomes a good contra buy.
Interesting. So TVS Motors in focus. Mind you, revenue at 1,190 crore versus 922 crore. No, I believe I'm looking at the wrong numbers. It's 11,905 crore in terms of the top line versus a top line of 9,228 crore on a YOY basis. So you've seen the top line go up quite sharply. Profitability also doing fairly well for itself. So you've got profit after tax number of 906 crore versus 663 crore same time last year. What we'll do is we'll quickly zoom in and understand what the expectations are before we tell you that, because before we give you an assessment, and we'll also look at margins before we give you that assessment. But we still have Ashi, I believe. Ashi, do you have a view with regard to a TVS Motors in particular?
Yeah, hi, sure. So actually, it's clearly too early to comment on the results. The numbers are just out. But I think in terms of our longer term view, two-wheelers as a space is actually a space we're not as comfortable with from a longer term perspective. And just to kind of explain why. If you're looking at the underlying dynamics of what's happening in the space, while there is clear momentum in the near term, and there is a kind of recovery which is expected near term, it should help kind of shorter term price performance. From a longer term perspective, you're seeing a very cozy kind of 4-player market turn into a minimum of 6 players with the addition of an Ola and an Ather. Profitability on kind of EVs, which is where the entire industry is moving, is at least as of right now substantially lower than that of your IC two-wheelers. Where this is going to emerge as we go ahead in the future is also not very clear. Now, in order to kind of value these companies, and whenever you're buying a company, you're actually buying it for its longer-term compounding of cash flows and earnings, we need to have kind of clarity 5, 7, 8 years down the line. What our relative market share is going to be, what is the actually underlying profitability on the EV business, and are you likely to see big shifts away from what current market shares are? We believe it's too early to really be able to take an accurate sense on this call, And therefore, when it comes to the kind of auto space, we are a little more comfortable in, say, passenger vehicles, where the number of players is relatively kind of intact. It's not that you're seeing a large amount of incremental players coming in. The transition to EVs is also likely to be a bit slower. We also kind of believe that there may be attractive plays in auto anks, especially auto anks that are not very dependent on ICE engines. But for two-wheelers specifically, because we expect this space to really kind of be the forefront in terms of the shift towards EV, until we don't have clarity on who the eventual winner is likely to be, and we believe it's still too early in the shift to actually be able to call that, it's a space we're largely staying away from.
Largely staying away from. You've looked at the numbers more closely, Snehi. You want to take us through what the expectations were versus the numbers?
So the revenue number for Q2, the street consensus estimates on the standalone basis was around 11,729 crores. It's coming at 11,905, so slightly better than what the street was estimating. Similarly, for the net profit, the estimate was about 951 crores. It's coming at 906, slight bit of a miss coming in on the PAT. The EBITDA number, what we can see over here in terms of what the estimate was, 1,500 crore rupees. Let's just pull up what the EBITDA number was, and EBITDA has come in at 1,508 crores. So yes, in line, but the real pressure here is on the margin, because we were expecting this number to be around 12.8% and it's come only around 11.3%. So in fact, 1.5% lower than what we were estimating on the margins front, and it's actually margins that are under pressure. So as we have more that the company releases on the exchanges in terms of either a presentation or a press release that highlights what has kept margins under pressure this time around, we'll have more idea. But let's just pull up the stock once again and see what TVS Motor is doing, if there is any change in the stock performance after the numbers have come out. Let's pull up the intraday chart, please, for TVS Motor. Yes, continues to be under pressure and further pressure. Now a 2% cut is what we're seeing on TVS Motor. So Harsh, this is the way the numbers have panned out, and it's actually margin pressure that is keeping the stock under some pressure. A 2.5% cut now on the stock.
Yeah, 2.5% lower, and it's a marginal miss as such. It doesn't look like a solid miss. TVS Motors, Kunal, do you have a view?
Yeah, we just discussed, this Harsh still looks very bullish.
Fair. Okay. Ashi, you're not positive across the basket on two-wheelers. Give us a sense on that. You were suggesting that, or you're tilting towards that. You're not positive at all across the board?
No, sure. So let me just explain, right? In our PMS portfolios that we run, our idea is kind of buying longer term business growth. And we kind of try to focus more in terms of where businesses can reach 3, 5, 7 years down the line. And that is really the growth that we're seeking to participate in. Now, within that context, right, if I'm looking at a two-wheeler company, I do know there's going to be substantial value being created by certain two-wheeler companies, but given the fact that you're no longer betting on the relative strengths in the ICE space, you are really talking about kind of 5 years from now, the vast majority of two-wheelers being sold in India are likely to be electric vehicles. Now, while ICE market shares are well known and quite stable for extended periods of time, it becomes very difficult to take a call in terms of who is likely to be the winner. What are the market share dynamics going to be 5 years down the line? It gets especially complicated when you have pure EV players like an Ola Electric and an Ather currently. Now, if you just look at someone like an Ola Electric was being very successful a year and a half ago, suddenly a lot of problems on some of their batteries and on the overall EV. And you've seen market share shift dramatically. Now, in that context, right, we know who's kind of doing well today, but 3 years, 5 years down the line, who's going to be the winner in the EV space? That company will generate substantial value creation for investors, but the level of predictability of that winner today is not very clear. And which is where, when we take longer term bets, when ours is a bit more of a buy and hold kind of an approach, we don't trade that actively. We want a greater level of conviction and clarity around the companies that we're investing in, actually being able to grow consistently over the next 3 to 5 years. And given kind of the fact that market share dynamics are still unclear, and also very importantly, the profitability on EVs. Most EVs are currently not really making too much in terms of margins. A lot of them have been loss making. ICE is a tremendously profitable business, right? Are you going to be able to make the same level of margins that you make in kind of ICE on EV scooters and EV motorcycles? That again is not very clear. When it comes to longer term investing, we prefer investing in areas where there is a greater certainty. And I think that is the core view. That said, I think there is clear near-term momentum, and over the shorter term, these stocks are likely to perform. Our kind of negative stance is more just from this longer-term perspective.
Point taken, Ashi. What we'll do is we'll slip into a short break. On the other side, we'll continue our coverage. Stocks.
8th pay commission has been announced and a chairman is going to be selected soon as well. So that is very positive, and I'll tell you why the 8th pay commission is such a big deal for the markets, even though it largely has to do with revision in pay scales, allowances and pensions for government employees. Now the quantum of employees that this affects, it affects over 50 lakh central government employees and 65 lakh plus pensioners who are dependent on the scheme for any revision, upward revision hopefully, in terms of the money that they are getting allotted. Now remember, the 7th pay commission was all the way back in 2016. So this is almost a 10-year jump after which we are seeing this 8th pay commission come out. And market experts also believe that if there is any positive news in terms of the allocation that the commission does towards government employees in their salaries, pensions as well, that could lead to a meaningful uptick in the amount or the quantum of disposable income that ends up in the hands of these people, and that could perhaps make its way to the market, find its way in terms of consumption. Either way, it's a win-win for demand, supply on either side. So this is a big announcement coming in. Kunal, while we're talking about consumption, or in fact, let me get this view from Ashi. Ashi, your overall take on consumption now. This 8th pay commission announcement was anticipated for a long time. The committee has been formed, that approval is in now. Your take on how this could affect markets in terms of consumption, demand, anything on that front?
So it's actually quite interesting because consumption has been a space which has been underperforming for the past 2 or 3 years. But what you have seen from the start of this year is time and again kind of incremental kind of positives coming out. It started with the kind of tax cuts at the budget. You've recently had the big reductions in GST, the entire GST rationalization. You've also had a fall in interest rates, which does put a lot of money back in the hands of kind of households as EMIs, etc., come down. And then you had underlying rural recovery. And you now also have this kind of 8th pay commission, and given the sheer quantum of the number of people employed by the kind of government, that does kind of tend to have quite an impact on the margin. I don't think one factor on its own is kind of enough, but you have a very attractive coming together of multiple kind of factors. These should kind of play together and lead to a kind of consumption recovery. A lot of consumer companies are speaking of a recovery in the second half, and especially as we go into FY27. Now, this is a space which is a very attractive longer-term kind of structural play because of, as economies move beyond the $2,000, $3,000 per capita income mark, you do see sharp increases in discretionary consumption, and which is why for many years consumption has been considered one of the plays from the Indian investment landscape. A combination of these various factors that I discuss does lay a very attractive foundation for the sector to really come back in terms of performance. And what we have been kind of struggling with a certain amount this year is trying to identify what are the specific sectors, right, that is going to drive the next kind of market move. And I think consumer could be one of them.
Okay, all right. Some of the OMCs also on your list, Ashi, see value in them. Stable crude prices, likely some amount of value left on the table where those stocks are concerned, along with the PSU banking stocks.
So I think oil and gas is a space that we tend to not focus so much on. Like I was mentioning our philosophy earlier, we like kind of predictability. We like having some kind of sense of being able to have a fairly accurate guess in terms of where a business is likely to be 3-5 years down the line. The moment you're looking at the oil and gas sector, just government interference, the volatility that you see in crude oil prices, it makes it very difficult to take a structural call on this theme. You also have the kind of underlying problem of this larger shift towards renewables over the longer term. So we tend to kind of stick more towards longer term structural plays, I think, which is why oil and gas is again a sector we don't focus as much on. But I think PSU banks are quite interesting, especially the better run kind of PSU banks. SBI clearly comes to mind, but you have others as Bank of Baroda, etc. The key call out here is that you are going to kind of see a valuation kind of a re-rating. Now, you're already well through this. There was a big gap that existed between the private sector banks and PSU banks. That gap has narrowed quite considerably over the last couple of years. But as performance of PSU banks are coming back, you are seeing growth coming back, you are seeing asset quality being manageable. These should kind of steadily compound on their earnings, and there is still a certain amount of a gap reduction play that could be there. PSU banks is a space we think one can participate in. We tend to prefer your better run private sector banks more in terms of the fact that we like longer term compounders of capital. But I think high quality PSU banks are also quite interesting, and they are available at quite attractive discounts.
The take coming in, we were talking about the oil and gas space. Today, BPCL and Oil India, they are two stocks that are in focus. They've signed a non-binding accord for a new $11.3 billion refinery, so that looks good. But the stock that was just flashing on the bottom of your screen is L&T Finance. Back-to-back two block deals happening on the stock. First with 55.9 lakh shares, that's 5.59 million shares coming in, and 6.43 million shares in another block. So lots of block deals happening around today. And L&T Finance is one such stock. Kunal, your take on L&T Finance, sharp spike in the stock right now.
Yeah, sharp spike, and I think because of the block deals now, the volumes for L&T Finance is almost at a 2-month high on the daily basis on the NSE. The last time I think we'd seen such kind of a volumes spike for L&T Finance was in the month of July mid. But unfortunately from there, the stock actually went to a 8 to 10% correction. I think from 215 to 20 odd levels, the stock came down to sub 200 kind of a mark in that time frame. So we may probably expect a very similar kind of a stance from L&T Finance over the near term, but I think it's been a fantastic chart on a YTD basis. Also, I think the stock has done exceptionally well, moving up from 130-40 levels to now 260-270 thereabouts. So long-term wise, very attractive, but maybe because of the block deal and the high volumes, you might probably expect that the stock may just about go into a bit of a corrective mode over the near term.
Okay, so that's on L&T Finance. Ashi, the other big mover today is an Indus Towers. Again, the numbers were largely in line with expectations, but we've seen a stock do very, very well. Is that largely on the back of Vodafone? Is that what is keeping Indus Towers abuzz, in your opinion? And is this a good value play? Because you will have some bit of the Vodafone debt, which will likely get paid off to Indus Towers rather, and therefore should be positive from a cash flow perspective where Indus Towers is concerned. How do you view this entire dynamic play out?
So Indus Towers is kind of interesting from a value play, and clearly you do have this event, right, in terms of the potential for the debt reduction. Let's see if that actually does play out as expected. It's a space we just broadly it is a kind of ultimately it is a utility. It is dependent on kind of growth of cellular infrastructure required in the country as the country as mobile penetration keeps increasing, especially in terms of 4G, 5G and incremental services. You will need to keep having incremental tower additions. That said, again, this is a space which is interesting, but I think you need to look at it more from a value perspective, because ultimately in this business, kind of ROEs are not going to be exceedingly high. It is ultimately a rental and a utility business. And accordingly, from that perspective, I think the moment you do get a certain amount of value re-rating taking place, especially in the context of possibly some event like this Vodafone deal, it's probably not the best longer term buy and hold.
Okay.
But clearly interesting from possibly a shorter term perspective.
Interesting from a short-term perspective, not so much from a long-term perspective. Ashi, some of the tire stocks, and we spoke with the management of JK Tyre just an hour ago. What's the sense like on that? Because again, there's huge positive traction there, given rubber prices have come off, margins are going up, and profitability is surging, because just a few bips increase in margin is causing that kind of impact on profitability, if I can call it. Do they also come on your radar as a result of all that's played out, or do you believe that the rally in the stock has already pretty much penciled in a lot of what's happening on the results?
So what happens with any industry like tires, right, or any kind of industry where there is substantial raw material fluctuation that can lead to big swings in margins, you always want to be buying these companies on a contra basis. At a time when raw material prices have moved up substantially, stocks have gotten beaten down because of kind of profits having plummeted. These are great times to buy these companies, and as kind of raw material prices start to come back down, you can see big upswings. If you get this contra call right, very often you can make very attractive returns over the kind of short term. And our view on most such kind of cyclical plays is that if there is clarity around the cycle, and especially if you buy into the cycle on a contra basis, right? And anyone who had bought into tires 3, 6, 9 months ago would have actually benefited from that. These companies need to be looked at from that perspective, right? Now, after a larger move, you probably just want to judge how much of the move you think is still pending. There is still going to be the next few quarters are still going to be quite attractive in terms of earnings growth as RM prices continue to come down. But like I mentioned, these are larger contra plays. You've already bounced off the lows. There probably is a certain amount of steam left, but you probably don't want to overstay it.
Okay. Kunal, I don't think we've taken a view on tires from you. JK, Apollo, structural moves that we've seen in some of these stocks. And the story also seems to be changing fairly quickly on the fundamental side of things. Talk to us about technicals.
Yeah, this is an exceptional move, and I have not seen the tire stocks moving up the way they've, I think, in the last 3-4 months, frankly. And this is a very synchronized kind of a move for many of the tire stocks on the upside. And I strongly believe that I think we are looking at a new wave of price uptrend from the auto anch names, and especially the tire stocks. I frankly wouldn't be surprised, potentially that these stocks over the next few quarters may actually try and challenge their lifetime highs, on a consistent basis, looking at the near-term trend, looking at the volumes, the pattern, the breakouts, because these stocks from 2024 highs, for example, JK Tire, I think had made a high closer to 540, 550 mark, had gone down to almost like a 50% correction. And from there, the stock is going into signs of a major recovery, has come back to 420, 425 where it's trading right now. I strongly see that this could be a potential stock which has potential up move of another 30% over the next 12 to 18 months. So very bullish on the entire tire pack.
Okay, and that time on the show where we go across to Snehi to wrap this market up. 2 minutes to go. Ashi, we'll thank you on that note. Snehi, over to you.
Well, yes, Harsh, if you take a look at the way the markets have panned out today, I would say not bad of a move given the kind of consolidation we